Bitcoin has long been perceived as digital gold. It's a modern store of value built on the same foundation that supported gold for centuries, namely scarcity, durability, and independence from any single government. That narrative gained powerful validation in institutional circles when Larry Fink, the CEO of BlackRock, publicly described Bitcoin as digital gold. This, coming from the world's largest asset manager, framed Bitcoin not just as a speculative asset, but as a legitimate hedge within the same macro framework as gold. And the core reason behind this comparison comes down to a major driving force significantly influencing both assets, something known as currency debasement. To understand this concept, let's look at what currency devaluation actually looks like. In the 1920s, a typical home in the US went for $6,300. Today, that same home averages around $420,000. A dozen eggs went for 13 cents back then. Now, it's shot up to $3.59. And a loaf of bread went from just 5 cents in the 1920s to $1.84 today. The products themselves haven't changed much, but the dollar's value clearly has. We can see this more clearly through the long-term chart of the US dollar's purchasing power. Over the past 100 years, the dollar has lost 97% of its value, and in just the last 5 years, it's lost 20% of its purchasing power. That means if you had saved $100 in 2020, it now buys you only $80 worth of goods and services. So in simple terms, it takes more dollars today to buy the same things you could have just a few years ago. This consistent erosion of currency value is what's known as currency debasement, and the core driving force behind it comes down to US debt. In the 1790s, America's total national debt stood at just $70 million. By 1982, that number had reached $1 trillion. So it took the United States nearly 200 years to reach its first trillion in debt. Since then, it took only 43 years for debt to surpass $37 trillion, and the pace only seems to be accelerating, with just the last year alone seeing debt rise by more than $2 trillion. What once took 200 years now happens twice in a single year. This exponential rise in debt is the clearest reflection of why the dollar's value continues to erode. Every new round of borrowing dilutes the purchasing power of existing dollars, fueling the very debasement that investors are trying to protect themselves from. Both gold and Bitcoin have been reacting to this phenomenon, a shift that renowned macro investors like Ray Dalio and Stanley Druckenmiller are calling the debasement trade. This has also been a core pillar of our investment strategy at Bravo's research. We've made consistent gains from assets that benefit the most from this ongoing currency debasement trend, including profits of 27% and 49% from leveraged long positions in gold, and several double-digit gains on Bitcoin when the technical setup looked favorable.